It's not sharing my screen. Fucking Christ. Screens these days. Can you see my screen now? Lovely. That's cool. Start over. Yeah, no shit. Okay, 1 sec. Could have taken those phone calls. All right. So, I mean, realistically, nothing of what I said should have really needed visuals. So we're going to paraphrase here really quickly. Levels that we look for that are not our daily levels, which you should already know how to do, right? Daily levels on SPY right now, 395.6, 392.5, way down to the bottom, 383.9. Even lower than that, which we didn't touch today, 371.8. Other levels that I get, and I just kind of draw lines. I don't use the dotted price level because these may or may not hold up in the next days. Pre-market high, 394.7. High of day yesterday, 394.25. Low of day yesterday, 387.2-ish. And close of yesterday, again, 389.45-ish, right? These are all the levels that I use, right, each day. And then now this part might actually be better visually. All you need to do when you're opening, right? This is what I do every single day. This is what I tell everybody that I mentor to do. It's fucking dead easy. You just look for the level below where you're opening and you look for the level above where you're opening, you know? And if two of your levels are really close together, you usually take the further away one and say, hey, if I break and hold under this level, I'm going to take puts. And if I break and hold above this level, I'm going to take calls. So we opened today, right? And as we found out, we kind of just ranged around. So on the first break and hold, right? So for me, a break and hold is, right, breaking under the level. The next candle holds under the level and closes under the level. Closes under the level. We close down here. So this looks to be continuation, right? So I took puts here. Sometimes, even though you have a break, you have a hold, sometimes the play just doesn't go your way. This happens, right? So we bounce back up, we broke and held back over the level with this candle, right? So from there, I exited the play. My reason for entering this play, break and hold under the level of 392.5. Broke, held, didn't stay under. So that means I'm gonna get the fuck out of the play, right? If the reason that you enter the play, you know, is invalidated, which it was by holding over it, then just cut the play. There's no need to hold the play until you're up here, you know, up here. Just cut the play, take the small loss. So from that point, we started to go into a bit of a range. You can see that by this gray box. Still thinking if I break and hold under this level, I'm going to do the same thing. I don't care that it kind of faked me out there. Go. You know, we start to break, kind of hold, a little bit iffy. When you go and you break and you have a little bit of a bounce like this, you know, we had 2 candles down. It is safer to wait until you break and hold now the bottom. Right. So initially I was going to do break and hold at 392.5. Didn't really go. Bounce, faked me out a little bit. So now I'm still watching for that level break. That still could be my entry, but my safer entry then goes to this, right? These just stayed here, closed right like this. So now my safer entry is a break and hold of 391.92, right where the bottom of both of these are. So as soon as we broke under that, which was on, where is it? On this candle, we broke right under, we go into this big candle, right? So first thing that I do when I'm watching for breakouts, I really only care about it breaking the level, but the number 2 thing that I'm watching is for the volume, right? If you have a break over something and a level that you've been trying to break, and you have no volume and you're going over it, that's not really a good sign, right? When you have a lot of volume or ascending volume over the break, that is a good sign. That is something that you're looking for. This is usually an indication of continuation in your breakout play, right? So I'm watching for the break here. We break, I'm looking for the hold. And as we start to move lower, volume starts to just rip up. I think by the time I entered this play, which is right around here, right where this red arrow is, volume was probably over 150,000. So, you know, I broke my level. I waited for the safe entry, even though I still could have taken it here and been fine. Waited for the safe entry, took it, volume came in, super happy with the entry there. And then it's fucking smooth sailing from there on out, right? The concept behind the entry here is not difficult. I waited for the daily level to break, waited for the daily level to hold, and when it held, I just held the play, right? It's not rocket science to take the play like this. From this point on, it only came back to touch where I had entered. Right here. That's it. And then fucking just died the rest of the day. There's not a whole lot more to explain on a play like this. In hindsight, you could go out and you could draw a channel. You can watch for the other levels, which you need to do. So as you approach the other levels, you can expect a little bit of resistance. It blew right through close of day the first time. So close of yesterday, it didn't even give a fuck about that. It just ripped right down. So we get to low of yesterday's low of day, right? Start to see a little bit more pressure. And then we start to bounce around there. This level goes from being a support yesterday, right? Support, because that's where it bounced, breaking under it, and now it's being a resistance, right? If a level that you bounce so strongly off of, then you're flipping, you're on the other side and you can't break back up over it, that's a good sign that you're going to go back down, right? So you're trying, you break something, couldn't even touch. We ripped up yesterday after that, ripped right through this today, no problem, rejection, follow back down. So when you enter a play like this, right, everybody always says trim some of your position and leave runners. I tend to leave runners around break even. So I would normally do that. Today, I actually just held the whole position to the very bottom. But if you're a little bit, less, or I guess more risk adverse, what you want to do is, as soon as you start to approach levels, any level, I don't care if it's the low of day, I don't care if it's the close, any of these levels, you should start thinking about trimming. So a lot of people say to trim on the way down and just sell it at, sell it right at the mark, at the ask, whatever. I really don't do that. So as I approach these levels, I actually, if I was going to trim 3 contracts, I just raise the stop loss on 3 contracts really close to where the mark is. So that way, if it bounces, right, and it rejects, I'm going to get the limit sell where I kind of wanted to trim anyway. But if it just rips right through like it did on this, and it doesn't hit my stop loss, then I can hold the whole position the rest of the way through, right? Trimming is really important, but the way that you do it is going to vary person to person. So rather than me starting to cut a position, than me breaking through that level and going, oh, damn, I wish I had all of it, I just set my stop losses for those contracts that I was going to trim anyway a little bit closer to where the mark for the contract is. And then like this instance, when it broke through, I got to hold the whole thing, whole position, right? I didn't have 70% of the position on this break. I had everything. Same thing here, right? So I'm holding, I see that I'm approaching the level. As soon as I touched it, I started to move those stop losses up, expecting there to be a pretty big bounce. It wicked a little bit up, carried right through, no issue. At that point, I knew that I was actually holding under my second level, right? And then there's only one more level that I had that was probably possible to hit today, unless we were going to flush, another 12 points from here, which is pretty fucking unlikely. We were already down, way down. If we did that, I don't even know what I would do. That'd be scary. So I didn't think that was going to happen. So after we broke through here, I had pretty high confidence just to hold the whole position. Yeah, I mean, you could set, at that point, I just set everything with a stop at 30%. So I take 30% profit on everything at the very minimum. As your play keeps going down, you slowly raise your stop losses. Super easy. By the time we got here and I had signaled in my channel that I was going to cut, I'm like, okay, cool. We've gone down from the drop point, roughly 12 points. It's a pretty big move on a random Friday. I'm just going to sell out. I sold at 38.6. So I sold, actually, I think it was the candle before we started to reverse. I think that's just good timing. I didn't really know that it was the bottom. I just kind of had a feeling that it wasn't going to go too much further down. Sometimes you just get a stroke of dumb luck. So I pretty much sold the bottom on that. So I had 10 contracts on the small account up here, sold 10 down here. It was almost 200% on that play. The reason for entry, literally just a break of a daily level. From there, it was super easy to hold. That one was simple. That was the only play I took all day. I know that on VC, the guys took calls on the way up. Understanding how to catch that or kind of seeing it is a little bit more complicated than the first play of the day, because as time goes on, you're going from one trend, which you can see by this downward channel, to kind of a transition point into another trend. And as the day progresses, the goal is to be able to see this downtrend transform into something else and understand where that's going to go. So downward channels, right, especially super long ones, tend to break up with a lot of force after they break through the top part of the channel. So you can see that throughout this whole trend, no candles held above at all, right? Until about 10:30. That's 4 hours into the market. We're just in this trend. After we finally broke and held, right, you can see volume start to come in. If we zoom in on this break, volume comes in pretty strong. And then from there, we don't ever see the channel again. But downward channel breakup tends to rip. So from this point on, you could have taken calls and just held them and probably been good the rest of the day. I did not. Alternatively, what you could do on this bounce is the exact same thing that we did here, but in reverse, right? So you're down here. What you need to do, you identify the levels that you're in between. At this point, it'd be for me 371.8, which no fucking way I'm getting down there and taking puts. So all I'd be looking for when I'm extended this far is a break and hold above 383.9 to go into calls, right? So again, if we look at what this is, go, break over, hold, wick down, fake. So if I was doing the same thing I was doing up top, I would have taken this play and I would have gotten burned a little bit, cut for a small loss. Like at the first play of the day, I cut for like 11. I think it was minus 10, minus 11 up here. Would have been the same thing here, right? Break, hold, kind of confirmation. If you're waiting for this wick to form, not really looking super bullish on this pattern. So if you're really watching, you'd be smart and not take that. But let's just say we take it on any break and hold. Break, hold, break back under, hold. At this point, I would have cut. Small loss, no big deal. We already made 200% on this play. We don't give a fuck about it. The small 5 to 10% loss here. Follow back up, wait for break and hold again. No hold. Follow back up, wait for break and hold again, right? From here, after you enter on the calls, which was the point that I was telling people were like, oh, should I get in the calls? I'm like, no. Break and hold, 383.9. Finally holds, looks good. Volume continuation, right? This is important. Volume continuation. We have that there. Yeah, there's some good volume here. Break and hold above, into calls. Where are you looking for your price target? The next level, right? 387.41 goes, challenges it, pops up, break over it, hold. What are you looking for? Next level, right? 389.41. Also the close of yesterday. And the fucked up thing is, as you start to trade more, the fact that we closed today at the exact same spot that we closed on Friday is laughable, right? They tend to shoot stuff down, pop it back up, and then you'll see more often than not that you end flat, right? So you're at the same spot that you closed the previous day. It's like a sick joke, especially when you're down 12 points on the day. You're like, oh, there's no way it'll happen. It'll happen. It happened here. Like this trend was so strong downward to end right up here in the last, 40 minutes. Nothing's out of the realm of possibility. So just keep that in mind. They do like to close the previous close of the day before. When I say break and hold, what I'm looking for, I enter on the 1 minute and then change to 5 minute as I'm in a position. It's just less noise. But I enter on the 1. So break and hold is literally break. Second candle is the confirmation candle. After the candle that follows the break above, holds above the line, that's confirmation enough for me. If I have volume, that's even better. So on this breakout, I would have taken this play, right? Ascending volume as we approach the level, right? Breakthrough volume. What you really want to see though is after the breakout candle, so the breakthrough, good volume. The continuation candle, usually when you follow that you want the volume to be higher than the candle that was preceding it, right? So this one broke the level, had good volume. the next candle, this confirmation candle, in a perfect world, what is a good baseline for taking a trade is that this volume is going to be more than this volume. So let's go over here and see if it happened on this one. So breakthrough, decent volume, continuation candle, good volume, next candle even, good volume, candle after that, even better volume. That's good. I only wait for the first one, right? After this closes, breaks through, holds the level, higher volume than the previous candle, I'm taking that play for sure, without a doubt. Hold that however you want. I mean, I had a Lotto 3900 call. It was, I think I got it close to the bottom just as like yeah, sure, whatever. If we go back up, no chance we're going to do it. I was like down 80%, 90% over here, up, down, back 90%. I think it went to like 450% on that last run up, right? There's definitely potential for money to be made here, but on VC, I was very adamant about people, especially people with small accounts, not taking 0 DTE plays. If you're worried about your money, right, and you're like, oh shit, I'm gonna get burnt, like, don't play something where all of your money is gonna go to 0 at the end of the day if you're wrong. Please, like, it doesn't make any sense. Everybody, we see it all the time. They're like, oh, I blew my portfolio. It's like, as a trader, there are certain times where you have to look in the mirror and be like, well, is this really a good idea? It's like when you're trading, I used to think biggest returns are the most important thing. Well, if you're going to have longevity in trading, it's really about protecting your capital. So small incremental gains, if you can make 1% a day every single day, the compounding of that on your account is astronomical. Like, somebody go to a compound return generator and type in $500, right? And then make 1% a day. So, or just over 200 trading days, and make 1% on that every single day, right? And tell me that doesn't add up to a fuck ton of money. And nowhere in there do you need to take a 0 DT play if you don't want to. You don't need to take something where your money's going to expire at the end of the day. Like, I took a lotto play for $100 because I was up, $4,000 by the end of this. That's okay. But don't start your day with that lotto play. Like, if you have a little bit of profit, whatever, it's your money, you can risk it. I'm not advocating it, but you certainly don't need to do it to make money. So to kind of summarize the trajectory of the day, right? All we wanted to do for our entry was break and hold under 392.5. First time, got faked out. Second time, we sure as fuck didn't get faked out. Hold, super easy to hold. Never came back up to challenges again after this little touch here. Profit. I saw red at the start. I think I was down like 2% maybe right here. Easy as hell to hold. Rest of the day, fucking cake. You could take that anywhere in here and be happy. Calls, again, level break, daily level break, hold above. Good to go here. Would have gotten faked out here, but that's okay because you cut for a small loss after your trade is invalidated. Doesn't mean the idea is invalidated, right? It doesn't mean that just because you got faked out here, you can never take this trade again. It just means that the entry point that you had just wasn't the right time. That's cool. Cut it for a small loss. Don't hold it the way down here. Don't hold it the way down here. Just be like, oh, it didn't break and hold over it. I'm going to cut. I'll wait to re-enter. You waited, you re-entered, send the rest of the day. Easy 7-point run. So down, up, 2 trades, 1, 2, done. Oh, thanks, Karina. I see that. If everybody, if you're not in the VC channel, she just posted a quick breakdown. Break and hold is 2 separate 1-minute candles. I'm not waiting for a 5-minute candle to close for my entries on a position I'm just taking for the day. If I'm looking to take something a little bit long term, if I'm looking for a swing, I also probably wouldn't use the 5-minute. I'd probably use the 15, 1 hour, 4 hour. But if I'm just taking something, I'm trying to take it for 30 minutes, an hour, a couple hours. 1 minute on entry seems to be adequate for me. And then I just switch to the 5-minute after those 2 candles. So literally on the 1 minute, it's breakthrough candle, confirmation candle, 1 minute, 2nd minute. When that 3rd candle opens, I'm getting in. If I see a lot of volume, like I did on this one, where the volume is exponentially larger than the previous candle, sometimes I'll enter there. But we'll cover that in other VCs. That one's easier to to break down after you've seen it a few times, but something like this, right? Breakthrough, second candle, confirmation, holds over, good volume, third candle, enter, right? That's like the safest way to do it. And then I just switched to the 5 because if you're watching the 1 minute candle all the time, your eyes are going to go crossed. It's easier to just watch this. You have your stop loss in place. You hit it sometimes. It's okay. It doesn't make you a bad trader. Just make sure that you have a reason for entering a play. Like, don't enter just arbitrarily because you see something running. Hey, like we were talking about it in the group today. It's like, so before you take a trade, why don't you ask yourself, it's like, why am I taking this trade? If you can't tell yourself why you're taking this trade, then don't take it. Like, I've had moments where I've looked at myself, I'm like, why am I doing this? I have no answer. I'm like, well, maybe I shouldn't. Probably shouldn't do that then. Always have a plan, right? Always have your levels in place. Break this, I'm looking for my next level. Break of that, I'm looking for my next level. Break of that, I'm looking for my next level. It's that easy. You don't have to overcomplicate it. Oh, there's no like specific day that stuff like that happens on where they take the price back to where it was the previous close. It just happens. And I've seen it happen pretty frequently over the last few weeks. So if you're way down and you're like, well, this seems a little suspicious, like, and you start having upward movement, don't count that one out as a possible. Like, if I told you, hey, we're down 12 points, you're going to run back up 10 points in the last hour, you'd probably say definitely not. But then the market's weird like that. You can go into a consolidation day, and then the day like today, you're down, up. Previous day, fucking just death. And the funny thing is, the close of all these days is actually not that far off from one another. It's like 1 point different. Yeah, I mean, I guess it would be large deviations from the average. I almost think that that's like too mathematical. I just don't count out the potential after a long run down to bounce back up. And I don't bank on it, but just like keep it in the back of your mind. I think today, yeah, it's Friday. I think they're probably covering shorts, honestly. It would make sense. I don't really see any other reason. There was no news. Did I draw a heart? Yeah, I drew a heart this morning during pre-market. I tend to draw things on my charts. I think I have a frog floating around somewhere. Let's see if I can find that. Smiley face. There's definitely a frog somewhere around here. This guy? No. I don't know. There's a frog somewhere in this. It's like I Spy. I think my headphones are going to die on me. Yeah, headphones definitely died. Yeah, so moral of the story, and as I have more time to trade with everybody on VC, this will all start to make a lot more sense. It's a lot to throw at somebody after one run through. I probably won't go as in depth as I do with the people in my mentorship. I just want to give you guys kind of like a crash course today. Just keep it easy. Keep it easy. A lot of people have, like, I have so much shit on this chart that I don't even need. I don't use VWAP. The volume average, I don't even really use. I just have been watching the volume. Sometimes I'll use the squeeze if I need a little bit of extra confirmation. If you can simplify trading, if you can make it as easy as humanly possible, you're going to have more success, right? Because as a person, if you have 30 different indicators on your charts and you need to have them all line up for confirmation, that means you need to look at 30 different things and process them mentally in order to take anything, right? That means that you just have to be rushing around constantly trying to make sure that everything's in line, or, oh, did I miss something? It's like, that's just making your life so much more complicated. Like if you can really simplify what you're doing and find out what works. And for me, it's this level break with volume. That's it. I'm looking at 2 fucking things. You're going to save yourself a lot of hassle. So go back through days, make sure that you have good daily levels. I'm not going to just hand them to you. You got to do some work yourself. At least 3 touches on the daily. I don't care if it's 3 closes, 3 opens, any of the wicks, 3 touches, make those levels, delete everything else on your chart, right? At some point I do it every couple of months. I delete everything. Absolutely everything. Because, you know, if you have a level every 5 cents, the fuck good does that do you? It doesn't do you any good, right? Like these gaps seem really big, but I still hit between both of them, right? Like it works. Trust me, it works. Daily levels and then levels from the previous day before, maybe 2 days. That's it. Make it simple. Simple trading. Big results. You saw that there. Then don't be discouraged if you get something wrong, right? It's like that entry on the first thing, I did everything that I normally would do. It had all the indicators that it was going to keep going down, and it just didn't, right? When we're looking at these breaks, when we're looking at the breakouts, these are points where it is likely to do what you're looking for. Likely being the key word. It is not guaranteed. If it was guaranteed, we would never be wrong, right? Sometimes things look like they're going to go one way and they just go the other way for no reason. You got to keep that in mind. Don't let that discourage you. That did not stop me from entering again when it did exactly what I was looking for before, right? If I got discouraged and just gave up on my plan and I didn't cut early to save my capital, I wouldn't have taken this position. If I didn't take this position, I wouldn't have caught any of this, right? Keep that in mind. How many times do I retry? I don't know. If I fuck myself twice, maybe I'll stop. I'm entering like on this small portfolio. I'm right now I think it's at 10K. Yeah, I use max 3K per position. I lose 10% on that entry. I'm down $300 on a 10K account. I can enter a few times, you know, before I'm like, well, maybe I should just not trade for the day. It's all about sizing. Like everybody's like, oh, well, I don't want to take a small position size. Yeah, but when you catch the move, it's easy to hold that small position size to the bottom, right? I'm not stressing up here and cutting because I have a small bounce and then it runs to 200%. Like I could hold that fucker the whole time. So keep that in mind. Strategy is probably valid on other tickers. I don't see why it wouldn't be. I mean, it's all the same shit. I just trade SPY because I'm kind of lazy as a trader. I wake up in the morning. It's like, I know where I closed. I know what my daily levels are because I stare at the same shit every single day. If I wanted to, I can get up 2 minutes before market opens and know exactly what I'm going to do. I could set up this trading plan super, super easy. It's fast, right? Daily levels. And it's funny because everybody starts with the levels. Everybody's like, oh, learn levels, right? Learn your levels. And then you start looking at the TTM or RSI or all this other shit. And then you forget like the really basic stuff. So you go down this rabbit hole of how many indicators can I fit on my chart at one point in time. And you kind of get lost a little bit. I've been there. I've done that. You want to just make it easy. That's it. If you take anything away from this, like aside from just, you know, follow the trend, make trading as easy as possible. That's it. Cool. All right. So that was today. I'm going to do these, you know, probably a little bit briefer over the next few weeks. I'll do some more VC. Hope everybody has a wonderful Friday. I know on the East Coast it is almost 8:00. Go get a drink, enjoy the weekend, and we will meet back here on Monday. Word. Take care, everybody.